do you think that commercial real estate could be big enough for, causing something like a 2008 crash?
We saw a decade of appreciation within 3-4 years, right? And then what does the rest of it look like? I think we are kind of reverting back to your point to those normal times. I think the median rent here in New York City is like $4,400.
But you brought up Airbnb. People like to pin Airbnb as the reason why housing prices have increased.
I don't think interest rates are going down anymore. When he told me that, I was shocked. I was like, where do you live?
You had a good tweet about the average American, so I'm going to read it out for you here just so you remember. But what's up, everybody? I'm back with another edition of the Macro Insights podcast, where I've got the man, the myth, the legend, John Pompliano in the house, where we're going to break down everything about real estate. But we've got some treacherous macro waters here, John, so I kind of want to break into it. We've had a big concern with commercial real estate and personal real estate, right? The average Joe trying to buy a house. So I'll start it right off the bat. How are you looking at things? How are you looking at the overall real estate market as it stands right now?
Yeah, I appreciate you having me on. I appreciate the awesome intro. That was great. Real estate in general. I mean, look, I look at it in a few different ways. One, you have to take it sector by sector, right? Region by region, city by city. Everything acts a little bit different. Obviously, on the commercial side, we've all seen the headlines. We've seen the buildings trading at, pennies on the dollar from what they were trading at, 10 years ago or so. And I think that's just a case of occupancy, right? And vacancy within those buildings. And I think that a lot of those buildings just haven't had good tenants stay in them. And even if you've been a AAA tenant or something like that, very highly rated, people are leaving these buildings in droves. And I think that's driving a lot of this price action. On the personal real estate side, once again, it's city by city, right? I know you're in Tampa area. I'm in Miami. Those two markets alone, just in Florida, are acting wildly different. I know Tampa has had tough times recently. Miami is still holding on to kind of that pandemic boom, but we're going to see what happens here in the future.
Now you mentioned commercial real estate, and that's always been very interesting to me because it seems like the office space is something that's, been on top of mind to a lot of people, right? We've seen the movement to remote work, and we're kind of seeing that shift a little bit back towards, coming into the office, whether it's a hybrid environment or something along those lines. Now, I've heard from a few different perspectives that because commercial banking is, large in a sense of dollar amount, there's not a lot of access to the average Joe to get into commercial banking. So, do you think that commercial real estate could be big enough for, causing something like a 2008 crash where it's, kind of driving it down? Or is commercial real estate just such a small cog of everything that's going on that, essentially it could cause somewhat of a damage to the economy, but it's not necessarily, going to be a main driver as the traditional housing market was in 2008?
Yeah, I think commercial real estate has that opportunity. I don't think it's going to happen, but there's always that opportunity, right? If every commercial, especially office space, when I'm saying commercial, I'm really talking about office, but there's obviously industrial and other things, retail. But it has that opportunity. If it all went to zero, right? Financial markets would be a little stressed. But I don't think that we're going to see that anytime in the future. I think that we're going to see, we've kind of reaching a bottom here. You were mentioning remote work. I think a lot of companies are starting to force employees to come back in the office. Most of the people I talked to that went remote during COVID are now realizing that, hey, look, my company is now requiring me to go 3-4 days in the office, whether that's because they already had obligations or they're saying, look, we're more productive in the office. I'm more productive in an office for sure. So it's, where do companies go from here? And I think a lot of companies will will continue to force people back into the office. But then again, it depends on what industry you're in, right? Banking, you're going to probably be going into the office. But if you're any type of entrepreneur or any type of call it like those ancillary businesses, I don't think you're really forced to go back in the office. And I think it will be kind of like an individual by individual basis.
Yeah, and then it seems like there's a lot of mixed use buildings kind of popping up, right? Where they're mixing in office spaces, but retail things and big downtown cities, right? I mean, you named it. You're in Miami. I'm in Tampa. There's a lot of buildings popping up where they either have restaurants or something on the first floor, or maybe a mix of condos and office buildings. Do you think that that trend is gonna kind of help I guess, weather some of the storm. And, initially some of the storm that is caused by this commercial real estate is mostly from, people just essentially just moving from, like, I guess, like the great migration, right? We saw a lot of movement from blue to red states, California to Florida, to Texas, to Tennessee, all those kind of things. So, I mean, obviously we've seen like some of the layover effects from COVID. Do you think that that's kind of, in a sense, like almost over because we've seen so much movement that companies are now starting to settle in and just get used to this new environment, whether it's in a different state or like the hybrid type environment?
I think the operators are trying to figure it out, right? They don't really know, and no one really knows, and everyone's trying to take that educated guess. I think the mixed use stuff with the office and the retail down low or the apartment buildings alongside the office, there's a reason they're trying them is because it gives you more flexibility, and it kind of disperses your risk a little bit. Granted, if no one's in the office, no one's going to be downstairs at the retail places. If no one's in the apartments, no one's going to be downstairs in the retail shops. So I think that's one thing to think about. And then, yeah, look, it's city by city, right? So Miami, for example, they are still pushing in office. I know everyone sees, I moved down to Miami during the pandemic, and everyone sees, oh yeah, you're on the water, you're doing this, you're hanging out at the pool, all of that. But there's a lot of work happening all around the world. And I think that people will continue to congregate. And then think about a different sector, WeWork, right? Co-working space. Everyone went remote. Co-working should be booming because, I moved cities. I no longer work in an office in that city. I like to get out of my apartment to work a little bit. And who wouldn't like to split that cost? But obviously we've seen that isn't the greatest business model, at least for right now. But they seem to be rebounding a little bit.
Yeah, so I think that it's going to be a trend, right? I mean, we're kind of talking about it, right? I mean, and the interesting part about commercial real estate too is like more of the financing aspect of it with the floating rates. So, I know obviously, yeah, I have friends that anecdotally are looking for homes. They were waiting a little bit for the interest rate policy to come down. Powell has really dug his feet in and kind of kept this higher for longer mantra, right? I mean, it seems like the market's been calling for an interest rate cut for over a year now, and it doesn't seem to be coming. Maybe not even this year. So, with that and like kind of the floating rate policy, do you think that's going to continue to affect the commercial real estate, or is that more of I guess just kind of the hearsay here, where it's usually the people that are getting into these financing terms, they're going to be all right because they're shelling out hundreds of millions of dollars majority of time for these large commercial buildings?
I am not a fan of taking floating rate debt for a long-term asset, right? So if you have a building that you're going to own for the next 30 years on the commercial side and even on the residential side a little bit, I am not a fan of taking floating rate debt. I understand why people do it. It is a vehicle that people use to get a lower entry price and be able to kind of, essentially try to time the rates, refinance when you can. I'm an awful timer. I'm an awful gambler. I can never seem to get it right. So I try to stay away from that. And I try to look at the long tail of things and think, what does real estate do for the investor and for the owner? And I think that there's a lot of advantages, depreciation, cost segregation. There's just so many advantages there. But I'm not a fan of taking floating rate debt. I think a lot of people that took that floating rate debt in, late 2021, early 2022, I think that a lot of them have already had those capital calls, and you're seeing a lot of people obviously default on loans. Took a 3-year floating rate loan in 2021, came to this year, they didn't know what to do. They just turned the building over to the bank, right? And said, here, go ahead and sell it, get what you can out of it. But obviously that's detrimental to businesses and individuals.
Yeah, so then okay, that makes a lot of sense, and I agree with you. The floating rate is very tough, right? I mean, it's essentially a gamble on timing, and you never really know, right? I mean, obviously, who could have predicted COVID-19? Who could have predicted a lot of these things? The interest rate hike at at basically an all-time pace. So, but with that, how are you looking at the interest rate environment when it comes to personal housing, right? I mean, whether it's interest rate or investment properties on single family homes, like that kind of aspect. It seems like the narrative that I'm hearing is that inventory is pretty low across the board. There is the high interest rate and higher insurance, higher taxes, like all these things are making it very hard for investors. and then, personal people, or, people trying to find their own single family home to live in, it is pretty difficult because, of all the factors I laid out too, making the average housing price extremely high. So, how are you looking at it? Is that narrative, I guess, kind of carrying over to things that you're seeing, or, it's all just kind of the fugazi, and it's, still doing all right?
Yeah, well, let's look at Florida, right? I'm based out of Miami. Insurance in Florida has been bananas over the last, 2, 3 years. Premiums are up 100%. So even when you're a homeowner, there's still risks. And I think a lot of people are starting to realize that, I've owned a home for a really long time. I thought I had kind of that like fixed rate mortgage. I thought I really wasn't going to see those, 10, 20, 30% increases in my monthly cost. If I'm looking at a single family home today, I would take a few things into account. One would be the mortgage rate, right? So obviously that's going to be your biggest driver of affordability. One would be the supply in both that city. And then one would be the rent prices actually, right? So what can I rent in that city for the same price? And what are the rent trends over that time? So if the rent trends seem to be softening, which we've seen a lot in these multifamily, in the multifamily sector, where a lot of investors are putting a lot of capital. You'll see a lot of those syndication deals kind of buying up the multifamily properties. You have to look at that as well. And I think that, when you start taking in the total cost with insurance, with taxes, with mortgage rates, right, you basically buy the house again over the course of the mortgage, right? So over a 30-year mortgage, you're basically going to buy the house twice through interest and then principal as well. So I think that you have to take everything into account.
Now, are you seeing like the housing market? Like, how would you determine like the strength of the overall, right? I mean, you mentioned it, Florida, like Miami's still doing fairly well. We have, Tampa's fallen off a little bit, but it seems like to me that, in certain pockets in the area, it is pretty strong. But I'm hearing like, rumblings of, places like Chicago, like downtown's not doing well. The suburbs are doing well there. California's still kind of hurting. And everything's kind of slowed down. Well, we're not seeing obviously the craziness that we saw in COVID, where people were coming in hundreds of thousands of dollars over asking, all cash offers, that kind of craziness. Do you see it as more of like a revert to the norm, where you get asking, maybe if it's fairly priced, if it's not, some homes pocket on for a little bit longer than we saw during the COVID times. So yeah, how would you kind of describe, I guess, like just in general, the strength of the market, and like some of the factors that you're seeing? Is it because low inventory and like kind of that layover effect from COVID, where we saw, obviously increased lumber prices and labor costs and everything like that? If you don't know this already, I am Green Candle, also have the Macro Insights podcast. You might have found me from there. So I appreciate you tuning in on this new podcast, the Macro Insights channel. If you want to support Green Candle and get some sick merch, you can check out thehodleshop.com. They've got a perfect section of Green Candle merch. I've got the sweater on right now. I've even got the white hat. We got a sick white hoodie as well. They got all different kinds of colors, truckers. They've even got the nice little green candle on the back. So much cool stuff. So go ahead and check it out. All right, enough for me. Back to the show.
Supply and demand, right? How much is someone willing to pay for the house? And what we've seen is that since 2020, I think since March 2020, the U.S. average is up. The U.S. average single family home is up about 45% since then. That's a large increase within a 4-year period. And I think my personal opinion would be that like we're kind of seeing, and I was talking to someone about this the other day, that we're seeing basically like we saw a decade of appreciation within 3-4 years. Right. And then what does the rest of it look like? I think we are kind of reverting back to your point to those normal times almost. Right. And we'll see some appreciation depending on the market. Obviously, inventory is going to be a big driver of that. There will always be people, if there's a death in the family, if you move jobs, you have to move cities, you lose your job and you can't afford your mortgage anymore, God forbid. I think we're starting to see kind of like what has been happening pre-pandemic is starting to happen again. Right. And people are starting to get those normal inventory levels. I know that pretty much every state is down on inventory. There are some outliers for sure. I know Texas has been in the news a lot, especially Austin, Texas, because they saw the influx of demand, right? And they didn't have the supply. there's a million things people are trying to do on the supply front. They're trying to build better. They're trying to build more homes, but they're also trying to get people. How can I lock in a lower rate? That's where the floating rate comes in. So I think it's just supply and demand. Miami has, and I speak to Miami specifically just because that's the market I really focus a lot of time on. Miami still has that dwindling demand, but we're definitely seeing more and more homes come onto the market. But once again, it's just, what's the average interest rate in that city? And then where does it go from here? Right? What's the average mortgage rate of the homeowners in that city? And then where does it go from here? I think that we'll see it slowly tick up in just about every state over the next 3-4 years. I don't think interest rates are going down anymore.
Oh, really? So you think that the interest rates of mortgages are going to keep going up?
Well, let me backtrack. It won't go down a nominal amount. We're not going to see 3% interest rates over the next 5 years. Not in my opinion, but we could, right? I'm taking an educated guess.
And I agree with you. Like historically, those 3% interest rates were extremely low. And I think I saw something where it was about like 60% of current mortgages are at 3% or lower, or maybe it was like 3.5. So it's an astronomical amount. And like you said, it's people try to complicate a lot of things in the economy, but at the end of the day, this is just simple supply and demand, right? I mean, we had COVID would break out where things like lumber, labor, the trades, they were kind of hard to come by. So the home builders didn't really have, weren't really anticipating the high demand from people to move out of apartments into more of the, like neighborhood suburb area. And we saw that massive influx when people could just work wherever they want. Now we're getting back to more of like, all right, go to the office downtown. Maybe somebody wants to rent an apartment downtown. So the demand isn't as high, but the supply isn't high either because people who are in homes aren't really going to sell because they're looking at their current interest rate. And, there's not as many homes just popping up out of nowhere, right? You mentioned Austin. Austin's very near and dear to my heart. It's where I grew up. I know it's been the fastest growing city in the US for, since I can remember, since like middle school time for me. So dating myself a little bit. But, it seems like the demand and kind of the booms of a lot of these cities is slowing down over. I mean, you're in Miami, so would you kind of, I guess, attest to that? Where although Miami has been booming and it was, just rapidly, it was just kind of like a, a big shock to the system that Miami saw all these people kind of moving down. Obviously, there's still people moving down day in and day out, thousands of people coming down. But do you see it still quite as the migration as we saw, a couple years due to COVID?
It depends on the class you look at. So Miami, the stat I always use is since 2020, Miami, the narrative is look at how great Miami is doing, the capital of capitals, right? We got the mayor saying, how can I help? Which is awesome for the demand side. But then look at price per square foot, I think is a big driver. So when you look at over $1,000 a square foot, those are selling out the door in Miami, right? Because if you have a lot of money, you're less affected by the interest rate that's going on. So if you look at kind of the single family homes in Hialeah and a lot of other places, is people actually moved out of those areas. The Miami-Dade lost residents from 2020 to I think 2023. I haven't looked recently at the stats, but it was a gentrification, right? Good or bad, depending on how you look at it, right? It's bad. People lost their homes. They're getting kicked out of a city they lived in for 10, 15, 20 years because new people came in and said, look, I have the money to pay for it and I'm willing to pay up for the same thing that you are not willing to pay up for.
Yeah, and it seems like that's kind of like the growing trend, right? I mean, like bad areas that are kind of, are kind of in there. Like people kind of flock to maybe some of those areas to help gentrify some areas of the city. But you saw like, a massive exodus in that area of Miami, which is pretty interesting, right? I mean, it seems like you go on whatever, any one of these social media platforms, it seems like everybody that's a young millennial is kind of flocking to Miami, right? But it's not always the case. So it is, kind of interesting. So, but I want to take a step underneath the hood, right? Where we've been kind of talking about housing. I know you follow a lot of, the Fed, kind of what's going on there. How are you kind of looking at the overall economy just in general? Because, I think that also kind of affects housing in a sense, right? Because, you need renters to have jobs in order to pay the rent, right? To pay the bills, kind of go through there. So how are you looking at that stuff, just in general, of the overall kind of health of the economy?
Let's look what the Fed's doing, right? Higher for longer. I think everyone was expecting at the beginning of this year for the Fed to kind of come in February or March, cut rates, right? Everyone kind of get a little bit of relief on the housing sector. That obviously has not happened. Jerome Powell has signaled that we will stay higher for longer, whether that we see, one rate cut this year, two rate cuts this year, maybe even three this year. And look at all the predictions, right? I know predictions, people love to trash on predictions in hindsight because, people took guesses and they said their guesses publicly and then it didn't happen. But Moody's, Zillow, all these places, they're predicting we're going to stay 5 to maybe 6% plus in mortgage rates over the next 2-3 years, maybe even 4 to 5 or 3 to 4 years. So let's just see what happens. But like I said at the beginning of this, I'm not in the guessing game. I know I've made already some predictions on here, so I'm going to try to reel those back. But I'm not in the guessing game of like, oh, hey, look, what's going to happen to interest rates? I try to just play with what's in front of me at the time, which is why I stay away from floating rate debt.
Yeah, no, I completely get it. I've put you on the spot here, tried to make you give a little predictions and whatnot, but
I'll still give them. Don't worry.
Yeah, I mean,
They'll be wrong, but I'll give them.
Yeah, I mean, at the end of the day, like you said, like I think the beauty of real estate, that there's a few different aspects of it. It's, in the US, we have the 30-year fixed mortgage that you can definitely utilize. And, there's a lot of great products where, as a young like investor, entrepreneur, whatever, like kind of getting into the game. Yeah, the house hacking. I saw you made a tweet, kind of tongue in cheek with that, where it's like buy a duplex, live in one of it, and then rent out the other. And you could obviously see split down the middle which side somebody would want to live in and which side somebody wouldn't. But that seems like to be kind of like the growing trend as far as like housing affordability. And do you think, I mean, the house hacking has gained popularity over time. Definitely in the past decade is kind of when I've started to notice it and people kind of picking it up. But, I mean, I still, anecdotally, all my friends, I'm probably the only one out of all of them that is continuing to do that. So do you think that's going to be, I guess, a trend going forward where that's how affordability is going to have to become? Like, I mean, in order to buy a home, because, as it stands right now, housing affordability is getting pretty tough. And, as real estate just keeps going to continue increasing, as the dollar keeps inflating, those hard assets are going to be harder to come by, especially in the housing market. So I guess, like, taking a step back, what do you think that's going to be a trend that you're going to be following here coming forward? More multi-zoned properties, more multi-zoned areas?
I think each city and municipality is trying to do what they can to make their city more affordable for the average person, right? I think they are all trying their best within relative terms, right? Some are doing better than others. The house hacking, I like house hacking. Why not, right? You can rent one side out, you can live in the other, you can lower your cost basis. The FHA loan, you live there for a year, you can move out. Now you have an investment property. The way I look at all investment properties are, what's my return, right? What's my return versus what's my risk? I think the risk in the house hacking aspect is, if you take floating rate debt, mortgage rates increase. If you don't take floating rate debt, okay, what does insurance look like over the next 5, 10, 15 years? What do the rents look like over the next 5, 10, 15 years? And I think people are just kind of doing that cost analysis right now. And then some people will be renters forever, right? Some people don't mind it at all. Owning a home can be a headache. Right. I know people who moved into a new construction home and they were shocked at how much stuff they had to do and how much like random things they had to pay for after it broke. And it was new construction. They thought they were going to walk in and be like, dude, I don't have to touch anything for at least 5 years. Right. And you just never know what's going on. But yeah, I think house hacking will continue. Obviously, government programs that are trying to help first-time home buyers, those have been more and more active because of the affordability issue going on. So I think we'll see that trend continue. There will always be people looking to own their own home, but it's just, what does that home look like? Obviously, we've seen homes get smaller over time, and I think that's just because of the price. Right. People love to compare, what is it? The 1980s. People love to compare the 1980s because mortgage rates were like 14%. Right. And to the average person right now, that sounds crazy. They'd be like, dude, I wouldn't even touch a home with 14%. But the gap between salary and home prices was lower. And that's the biggest problem, I think, right now is people just aren't making enough to justify these prices and to justify what they're spending on the mortgage. You look at over the last 3 years, people are like, oh, I got a house in 2020. And it's a flex to have a house and to buy a house with a low mortgage rate in 2020 because you're like, dude, I'm locked into 2.5%. I don't ever have to move, right? You might have to for life events, but if you don't have to, why would you move? And I think that's just the reality of what we're into today.
Yeah, and it seems like it's unfortunate, but a lot of people, got lucky timing the market. I mean, I'm one of those people got kind of lucky, locked in a
Let's
low
go.
in a duplex. I'm house hacking it, so I mean, I did get very lucky, because during that time, right? I mean, everybody was kind of saying, you know, what is going to go on. Everybody was really worried, but sometimes you kind of fall into it, and luck turns your way, to say the very least. But we're kind of talking about housing affordability. I did see on your Twitter too, you did a nice a retweet of a chart of the more than 50% of the overall U.S. population living in some pocket areas. So I mean, it looks like majority of that is like Florida, Houston, Dallas, Austin, the big cities in California, and then the big major areas in the Northeast, Chicago sprinkled in there as well. Now, do you see that as a potential issue where people are kind of trying to migrate all into, pocket booming areas in the U.S.? I know we've kind of discussed that a little bit here with Florida, but, other areas of the U.S. too, where, we're not really seeing much of in the flyover states and everything. So maybe those markets might calm down, but the big ones are going to be the ones that, maybe are the higher paying jobs. But unfortunately, like, people just, unless you're there for a long time, you can't afford to move down there. What's up, everybody? It's your boy, Brandon, the brains behind Green Candle. Thanks for checking in this new channel I've got here at the Macro Insights podcast. You can help support me and check out new content that I'm bringing out in short form on different social media channels at Green Candle IT on X, on Instagram, and on TikTok. So be sure to check me out there. And if you want to follow me personally, you can. I got it all on X at bkeys1010 and at Instagram at keysopen_doors. So go ahead and support your boy. All right, enough from me. Back to the show.
There's a reason they're higher paying jobs, right? I'm from Raleigh, North Carolina. When I first looked at my very first job coming out of college, I looked at the job in Raleigh. I didn't take either of these jobs, but it was the same company. And they were basically like, look, you could work at a Raleigh or you could work at a New York City. And there was a big price difference. There was about a 50% price increase for working at a New York versus working at a Raleigh. And I think that's just, quality of life and where you want to live and what you choose to do. Big cities like New York, Miami, Boston, Washington, D.C., these big cities, I think, will always attract people because of what they bring. And it's not really the quality of life necessarily, but it's like how many attractions are near you, right? The amount of people, the excitement. I tweeted the other day, I was like, the energy in New York City right now is absolutely electric. It is insane to see that so many people are buzzing around. They're trying to make money. They're trying to build the next thing. They're ambitious. And you may not really get that in Ohio. I'm not saying people in Ohio aren't ambitious. I'm not saying people in Ohio aren't building great things. But I think it's just a different environment and it's who you want to surround yourself with. And that's kind of why we're seeing people draw back to cities a little bit. And yes, obviously you have hey, I was remote working. I moved to the suburbs. Now I don't want to commute an hour each way every single day into the city. So we're seeing people kind of move back to city, not in droves, but we're definitely seeing people kind of revert back to what they were doing pre-pandemic.
Yeah, 100%. And you kind of like hinted at, changing up in like the smaller cities, right? So, are the smaller homes. There was the little bit of a boom of like the tiny home, which I feel like lasted for like, I don't know, like 3 or 4 years. I felt like I heard all these people like buying them and kind of popping up, but I haven't heard of them recently, right? You mentioned New York City. Everybody kind of jokes like, all right, it's going to be like $3,000 and you live in a shoebox, right? A month. So, maybe people realize that wasn't the best quality life, but do you think that is maybe a trend that's going to, I guess, kind of stick around, as I've kind of noticed it toning down? I don't know if that's just me being ignorant and kind of ignoring it, but is that kind of more of a growing trend where the newer builds are maybe, less home just so it's more affordable?
Definitely. I definitely see it going, less homes equals more affordable for the average person. I like to have as much space as possible, right? Within my means, of course. So I definitely see the trend of like less home because it's more affordable. But the tiny home thing, look, everyone was jumping on, especially like I'll mention it, the Airbnb craze that happened. Everyone's like, oh, I can put a trailer in my backyard and rent it out for $200 a night. Definitely doing that. So I think that we're trying to see like, or we're looking and seeing people kind of move to where they want to move. And look, if you can work remote, you're going to go out probably to the country. You may work out of the city because you like that lifestyle, but you're probably going to want more space for less money. And I think that's like an obvious thing. And then it's like, okay, well, what's the flip side of the coin? The flip side of the coin is like, people in the big cities are willing to spend $3,000 for a shoebox because it's New York City, right? I think the median rent here in New York City is like $4,400. I heard someone talking the other day, and they were mentioning how the broker fees are like 15% of the annual leases, which is crazy to pay, I think. But people are doing it because of the inventory levels and because of the demand that we're seeing for these apartments. That if the demand wasn't there, the price would decrease. But the demand's there, so the price is just going to keep going up.
Yeah, 100%. And it seems like, yeah, New York's kind of making a little bit of a resurgence here where people are kind of coming back and realizing that the true power of like things you're lining out here, right? I mean, the jobs, the kind of the culture there. And I think that's, that's always going to continue, right? Maybe we saw New York take a little bit of a hit during COVID just because of how, close everything is and all that. But I wouldn't be surprised to see it kind of resurge here. But you brought up Airbnb, which has been kind of a hot button topic. People like to pin Airbnb as the reason why housing prices have increased, in a lot of different aspects. Kind of like talking negative about Airbnb, whether it's staying, like lack of quality, all that kind of stuff. So I'll leave it broad for the initial question, but how are you looking at like overall like the short term rental and kind of like the Airbnb marketplace? Do you think it's here to stay, or you think it's kind of hurting and maybe dwindling down a bit?
Some cities have clearly embraced the short-term rental market. I know cities like New York, for example, have not embraced it. I think they've put a lot of rules around it. And that's one thing that scares me about, being an Airbnb operator is at any point in time, and this is, any industry, anywhere, is the government can just come in, make new rules. All of a sudden, your business model is no longer applicable in that city. So I think that's like the biggest worry is kind of the government and these local municipalities and like what they're doing. New York, they were trying to save the hotels, right? I think that is kind of the main driver there. Is they're like, look, the occupancy rate in the hotels is really far down. That's driving down the prices. People are going to Airbnbs. So how can we kind of revert that business and that revenue back to the hotels? Obviously, hotels are a big driver of tax revenue to the city as well. So they want people paying that money to hotels. But it's a little give and take. Some cities, I think, overdid it. I think New York overdid it a little bit. I think to have a short-term rental in New York City, you have to, one, be registered and have a permit to do that, obviously. But you have to be there, right? You can't rent it out for more than, 30 days out of, I think like, every 3 months or something. I don't know the exact numbers there. But yeah, I think that the short-term rental market obviously had a big driver because people thought it was free money. They were like, oh wow, I can just go get an Airbnb, buy this place for $1,000. And now what we're seeing is people trying to do that like rent arbitrage where they're like, oh hey, I'm going to rent it and I'm going to sublease it. They're getting permission to sublease it, but they're kind of just like, oh hey, how can I limit my risk? And instead of buying the place with the 30-year fixed mortgage, how can I just rent for a year, see if this works, right? And then I can just always re-rent the next year if it's working successfully.
Yeah, I mean, we definitely did see that, like a big Airbnb arbitrage, but I'm hearing like through the grapevines that that's kind of starting to dwindle down too, because a lot of people are seeing the failure in that, or the owners are kind of figuring out about that, and they're like, well, if you're going to Airbnb it and you're making this much money, why don't I just do it, right? So it was kind of an interesting time because I know a few people, a few friends down here who are doing that as well. But I think they're becoming more strict about it. Maybe in certain areas, Airbnbs are getting a little bit too dense. Like there's too many in a certain area. But yeah, there's also the risk of potential governments in whatever state you're in kind of cracking down on that. So I think we're going to see less and less of that pop up. But you mentioned like the kind of the states coming down on it, and I want to bring up rent controls and kind of how if you see maybe some potential risk for that as like housing becomes more unaffordable, you're obviously going to have more competition for renters, right? I mean, you see kind of in a housing crash or certain situations where their economy is not doing as well, more people having to maybe sell their homes or kind of get out of that, but they'll be forced to rent, which means more competition, which means rent will more than likely go up. You've seen California kind of try to implement some rent controls, and New York, I believe, is trying to do that as well. So, is that kind of, I guess, another tactic you think that we might see here if it gets into treacherous uneconomic times, which will make the numbers, I guess, be a little bit more difficult to become an investor here in the real estate space?
I think there's three things certain in life: death, taxes, and your rent increasing over time. When you take a big picture look at it, right, over the last 3 years, that's not a big picture. Look over the last 40, 50 years, rent will continue to increase. Some say, that's the dollar decreasing in value. Some say, that's just rent increasing in value. I think there's more homes today than there were 50 years ago. Don't quote me on that, but I would just figure there's more homes today than there were 50 years ago, right? But there's more people than there were 50 years ago. So once again, it's that supply and demand. If you have more people trying to rent in that city because they can't afford it, or maybe they just want flexibility, which I value a lot in renting. If you're a renter, you have that kind of like ultimate flexibility where you can always just kind of pick up your bags and go. Right. I think a lot of lease agreements are kind of like a 2-month breakup fee, pay 2 months. Imagine if you could pay 2 months of your mortgage and then just leave your house, and you have no obligation to anything. You got all your capital that you spent back. But then that brings up another side of the coin, is kind of like the down payment that people have to pay. I think that, where we've gone over the last 3-4 years is people just can't afford these down payments, right? So you'll see these, 0 down mortgages. You'll see all these kind of like tricks that people are trying to do to combat that affordability issue. Some of it's working, some of it's not really working, right? And I think that each person just has to look at their like individual situation and say, like, what do I value? Do I value flexibility? Do I value stability in a home, right? If you're in Florida, you're a little bit worried about the insurance, but most states is, your payment will be your payment for a very long time. Look at your grandparents. Look at anyone from like the 1980s. They're like, oh yeah, I bought my house for 20 grand. Bought my house for 50 grand, right? And what's it worth now? 300 grand, 350 grand. But then once again, there's a flip side to that coin. I was talking to someone at dinner the other night, and he was saying that he owned a house for 15 years and he's down on it. He's like, my house actually has not increased in value over 15 years. Imagine paying your mortgage, double paying for your home. 15 years later, you're like, I lost money. Yeah, you got to live in the home, right? There's value there and all that. But losing money after 15 years, that's not an investment. That's shelter.
Yeah, that's crazy. And then you got to think like too, it is kind of interesting. I've always like looked at housing as something that, kind of explain like the inflation of the dollar, right? Because you think, the walls, the floors, the appliances, everything, degrades over time. But generally speaking, the house goes up, except for in that case of there where,
I was shocked when he told me that. I was shocked. I was like, where do you live?
Yeah, probably not in a great area. That's not good. I mean, it's where you've probably seen some like, policy turns from that area where it was maybe, I don't know, like a B neighborhood turned into a C, D or something like that. That's unfortunate, but there are scenarios that I've heard of that too. So, housing, although it is, fairly easy game where, generally speaking, it does go up. There are pocket situations. So that's where it comes to analyzing, the certain neighborhoods and all that kind of stuff. But you mentioned a little bit about the consumer there. You had a good tweet about the average American. So I'm going to read it out for you here just so you remember. But it makes the average American makes $59,384 a year, owes $104,000 and 200 or 104 and 215,000 or $215,000 of debt, and can't read above a 6th grade level, can't do 10 push-ups in a row, lives paycheck to paycheck, and has $6,500 in credit card debt, and can't pay an emergency expense. So obviously we've had, the American dream. That's kind of what we grew up on. Our parents told us to save our way to financial freedom. But it doesn't seem like that can be really the case here. We have a lot of cracks on the consumer. So as like the outlook, the entrepreneur that you are, like, how are you feeling about like the overall, just like, American population here? are you worried about kind of like what's going forward and kind of keeping an eye on like what's going on in different countries? Because we've seen other countries kind of pop up, adopt different techniques, make it a little bit more accessible to the entrepreneur. Or are you just a great red-blooded American and you still believe in the American dream and that we're going to find a way out of this?
I'll be clear about this. I love America. I think America is the best country in the world. That's my opinion. Other people can have their own. Obviously, when you read those stats, it doesn't sound very good, right? You have the finance side of those stats, which was, $100,000 in debt. They have $6,500 on their credit card. They make $70,000 a year. They probably spend $90,000 a year just to live their lifestyle. They can't do 10 push-ups in a row. I thought that was just funny. So look, I get it. But I still think that this country has a lot of great things to offer. And other countries are trying to catch up, right? They're all playing the catch up game here. Obviously, we just saw that Russia just stopped using the US dollar for oil. I think that's going to be huge. And I think that people have to look at the US dollar and then look at those alternative assets. I know we were talking before this, how you're big into Bitcoin as well. I think that could be one solution to the problem. But I think we're going to need a lot of solutions to fix this for the average American. And I'm just not sure if we have those available to us yet.
Yeah, no, I mean, I agree with you there, right? I mean, it's going to be an interesting next 4 years here, I think, to say the very least, right? We got the election coming up. No matter what side you're on, I think we can all kind of say that there is kind of some hairiness going on underneath the hood, right? I mean, we just listed all these stats on the American consumer, but I agree with you. I do think America is the greatest country on planet Earth, and I think there's a lot of things to be optimistic about. Including the entrepreneurial spirit. I think there's still a lot of businesses popping up, like you said, you're in New York City, and there's going to be a lot of developments and innovation that come out of Miami, a lot of these cities where people are moving to and flocking to. So with all that being said, is there anything that you kind of have had your eye on that you've got you excited about the future, whether it's, some newer innovations, newer technologies that you think you see are popping up as you kind of, got your ear to the street a little bit?
I'm going to take the cheap way out and say AI, just because I think it will compound on what has already happened in the past. So if you look at the internet, right, how fast did the internet get adopted? It was about, 20 years, something like that, to where majority of Americans have access to the internet. Maybe it was 10 years, 5 years, something like that. I'm not sure. But I think it will compound on that, right? And I think there's a lot of innovative ideas that people are working on that will help the productivity of the average American increase. I was talking to someone the other day, and they were talking about the idea that our kids may not have to work because of how productive other things will be in society. And then it's okay, well, then what do you get paid? Where do you find the value and where do you add the value? But yeah, I think AI will drive a lot of this. And I think that will be one of the biggest drivers of the innovation in the next, 10 years.
Yeah, that's it. That was an interesting little future there. I don't know if I believe that we'll never have a room for human, I guess.
Wasn't my take. That's why I said I was talking to someone, but it was an interesting thought experiment.
Yeah, for sure. I mean, we've had I've talked to some people that think, that with the innovation of Bitcoin mining, you could potentially not pay taxes, implementing that in every single city as well. I mean, there's a lot of interesting, thought experiments we could play to see kind of how the future plans out. But, John, you've been very generous with your time, and I appreciate you coming on the podcast and kind of discussing everything about the real estate market and whatnot. But, why don't you tell people where they can find you and what all you got going on?
Yeah, you can find me at John Pompliano on any social media platform. I'm not going to tell you my email because I don't want it to get blown up, because I know Green Candle is one of the most popular. So if you watch this episode, watch all the other episodes and keep an eye on what Brandon's doing, because I'm excited for the future.
Awesome. Thanks so much, John. And I'll put all that in the show notes, and everybody go and check his channels out. So John, thanks so much.
Thank you.
Thanks for tuning into this episode of the Macro Insights podcast, where I am bringing you the latest and greatest in the macros, traditional finance, stocks, real estate, all these great guests, so you can be the most up to date on everything that's going on in the world. If you enjoyed this one, I've got another one cooking for you, so you can click on this right here and you can go to the next episode immediately. Or if you're looking for some more Bitcoin related content, I've got a channel right for you. It's my other channel, Green Candle. So go ahead and click that. All right. And if you found value in this, smash that like button, hit that subscribe button, tell a friend to tell a friend. All right. Enough from me. See you at the next one.